All right, welcome to another deep dive. Today, we're tackling Texas property taxes, specifically for commercial office properties.
Sounds like a plan.
If you're thinking about appealing your property taxes, this one's for you. We're diving into some Cushman and Wakefield market reports. We've got their office market snapshots, plus some articles to give us even more context.
Yeah, those reports are gold mines for this kind of stuff.
Our mission today, arming you with the knowledge to build the best possible case for a lower valuation.
Love it. Let's do it.
So we'll start by looking at those big economic indicators, both across the U.S. and then zeroing in on Austin, Dallas-Fort Worth, Houston, and San Antonio.
That's the approach, right? Big picture, then zoom in on the specifics.
Exactly. So first things first, the national scene. It seems like the U.S. economy, overall is actually doing okay.
Yeah, I'd agree with that.
But the office market, well, it's a different story, isn't it?
Definitely still a bit shaky, yeah. The Fed's rate cuts seem to be working. Looks like we're heading for that soft landing everyone's talking about.
Hopefully avoiding a recession.
Fingers crossed. But even with that good news, the office sector. Well, it's facing some headwinds for sure. Nationally, office vacancy rates have actually climbed for the 10th straight quarter.
Wow.
Yeah, and they hit a record 20.9% in Q3 2024.
Ouch.
It is a bit rough out there. And that 20.9%, that's the highest vacancy rate Cushman and Wakefield has ever recorded in their research.
Okay, so we've got this big number, 20.9% vacancy. Now, what does that actually mean for, let's say, me? I'm trying to appeal my property taxes. How does that national picture play into my local situation?
Well, think of it this way. High vacancy rates usually mean a weaker market overall, and a weaker market can translate to lower property values. That's a strong point in your favor when you're appealing. You walk in and you say, hey, look, national trends are showing high vacancy, and guess what? My property is right in the middle of it.
It's like setting the stage.
Yeah, exactly. You're painting the picture for the assessor, showing them the overall market conditions. But of course, you don't want to stop there. It's crucial to drill down, get granular, and look at what's going on in those specific Texas markets.
Okay, makes sense. So let's zoom in on Texas then, starting with Austin. The report shows a vacancy rate of almost 30%.
Yeah, that's pretty significant.
It is, right? I mean, 30% vacancy, that sounds kind of daunting.
It does sound high, yeah. But Austin's a little bit more complicated than that. It's not all doom and gloom. While the overall vacancy is high, certain submarkets are doing much better than others. Like the far northwest and south central areas, they're actually seeing strong leasing activity.
Oh, interesting. So even within a city, some pockets are holding their value better than others.
Absolutely. That's exactly why you need to go deeper than just those citywide averages. You got to focus on what's happening right around your specific property in your submarket. Imagine showing the assessor data that says, look, Austin's overall vacancy might be high, but my submarket is thriving. That's a powerful argument.
It's like you're saying, hey, don't paint my property with that same broad brush.
Exactly. You're telling a more nuanced story, which is always more compelling. And it's not just about what's happening right now, it's about the future too. You got to think about things like, is there a bunch of new construction coming online in your area? That can affect values too. Austin has a fair amount of new development in the pipeline.
Okay, so we got to look ahead as well.
Exactly. It's all connected. Now, how about we move on to Dallas-Fort Worth? That one's a bit of a head scratcher.
Yeah, Dallas-Fort Worth. Vacancy rates are going up, but rents are also climbing. What's going on there?
Well, it does seem kind of counterintuitive at first glance, right? But it actually reflects that flight to quality trend we're seeing everywhere these days. High quality buildings with all the bells and whistles, those are still in high demand, even with that rising vacancy overall. Tenants are willing to pay a premium for those top tier spaces.
So it's like if you've got a Class A building in a hot spot like Uptown Turtle Creek, your story might be very different from someone with a more standard Class B property in, I don't know, the OBJ freeway area.
You got it. The class of your property, the location, all of that matters. And understanding those nuances, that's super important for your appeal. If you're in a less desirable area with a higher vacancy rate, well, that's a strong argument for a lower valuation. And while sublease space is declining, it's still above historical averages, and that can put downward pressure on rents overall.
Okay, so it's a bit more complex than just looking at the overall city trends. Got to get into those submarkets.
Absolutely. Now, what about Houston? That report, it seems like a bit of a mixed bag, right?
Yeah, Houston, the report shows both challenges and opportunities. It's like, which way is the wind blowing? What stood out to you when you were looking at the data?
The sheer size of the market, honestly. Houston has a ton of office space. That means trends can vary wildly from one submarket to the next. If you're in Houston and thinking about appealing your property taxes, understanding those submarket nuances is absolutely critical. Like, look at the Katy Freeway East submarket. They actually saw positive net absorption in Q3, meaning more office space was leased than vacated.
Wait, hold on. Net absorption. Can we break that down a little?
Sure, net absorption basically tells us if a market's shrinking or growing. If it's positive, like in Katy Freeway East, it means more tenants are moving in than moving out. It suggests a healthier market, more demand for space.
Got it. So even though Houston might be struggling overall, someone in Katy Freeway East can point to their specific submarket and say, hey, we're actually doing okay over here.
Exactly. They can use that data to make a case for a potentially stable or even increasing property value. It's all about telling the right story with the data, right?
Right. Okay, we've got one more city on our list, San Antonio. The report makes it seem a little more optimistic. Vacancy rates are trending down, but they're still higher than pre-pandemic levels. What should someone appealing their taxes in San Antonio be focusing on?
Definitely new construction. The CBD, the Central Business District, has a big project in the works, and that could have a major impact on supply and demand down the road. If your property's near that new development, you could argue that its value might take a hit once that project's done, once it adds to the overall supply of office space in the area. And don't forget about lease activity. New leases and renewals, those can be really telling. They give you insights into market demand and rental rates, and that's valuable info for your appeal.
Okay, so we've covered those four big Texas cities. We've got national trends. We zoomed in on the local markets. Before we move on, though, is there anything else we need to keep in mind when we're using all this information for a property tax appeal?
Oh yeah, for sure. We've talked about the big picture, vacancy rates, submarkets, but don't forget about those market rents. Those are really important too, and the Cushman and Wakefield reports have that data. For example, if you can show that average rents for similar properties in your submarket have decreased, well, that supports your argument for a lower valuation. It's like saying, hey, if landlords are having trouble renting space at the same price, my property's probably worth less too.
Yeah, that makes sense.
And it's not just rents, it's occupancy rates too. Those reports show both stabilized and average occupancy for each city and the submarkets within them. If you can demonstrate that occupancy rates in your area have been declining, that's another point in your favor. It suggests weakening demand, which could lead to lower property values down the line.
So we've got market rates, occupancy rates, what else?
We've talked about demand, but what about supply? Those Cushman and Wakefield reports give you info on new construction projects, how much office space is coming online in each submarket. If a lot of new supply is entering your area, that could put pressure on rents and property values, like that new construction we talked about in San Antonio's CBD, remember?
Right.
Exactly. That future supply, it's something to keep in mind. It's all a balancing act, right? High demand, limited supply, that usually leads to higher values. Low demand, increasing supply, that can push values down.
It's like a seesaw almost.
Yeah, kinda. And here are two other key things. Operating expenses. Those are crucial because they determine a property's net operating income, which directly impacts its value. If operating expenses in your area are going up, well, that could justify a lower valuation. Higher expenses eat into your profits, right? And then there are cap rates. Cap rates, or capitalization rates, they're super important for valuing commercial real estate. They represent the rate of return an investor expects to get from a property.
So how do cap rates come into play when you're appealing your property taxes?
Well, if you can show that cap rates for similar properties in your area have increased, that suggests property values might be lower. Essentially, a higher cap rate means investors are demanding a higher rate of return, which implies greater risk, more risk, lower value.
Okay, so we've covered a lot of ground. National trends, those Texas markets, all those factors like market rates, occupancy, supply and demand, operating expenses, even cap rates. It's a lot. I'm sure it can feel a bit overwhelming.
It is a lot of info, you're right. But remember, all this data, it's like your toolkit. You're going to use it to build a really strong argument for a lower property tax valuation. And we're here to help you understand how all the pieces fit together.
So don't just throw numbers at the assessor. Actually explain what those numbers mean.
Exactly. And in the next part, we're going to go even deeper into each of these Texas markets and give you some strategies for using this data to your advantage. Get ready for a masterclass in property tax appeal.
All right, so we've laid the groundwork. We understand those big picture trends. Now let's roll up our sleeves and really get into those Texas markets, starting with Austin.
Okay, Austin. We know it's got those high vacancy rates, almost 30% overall, but we also know some submarkets are doing better than others. So for someone in Austin trying to appeal their property taxes, what's the strategy?
The key is to really play up those submarket differences. If your property's in a strong area, like far northwest or south central, that's where you focus. Emphasize that positive leasing activity. Maybe even show that rents are holding steady or even increasing in those areas. You're showing the assessor that your property is not just part of a struggling city, it's in a thriving pocket within that city.
It's like saying, hey, don't let me in with everyone else, look closer. Exactly. And don't forget about the but factor. Austin's overall vacancy might be high, but UT, there's still strong demand in certain sectors, like tech. If your property caters to those in-demand industries, that's another point in your favor.
Okay, so you got to play up those strengths. What about the fact that Austin has some big construction projects coming up? How do you use that to your advantage?
You can argue that all that future supply is likely to push values down in the coming years. It's a way to acknowledge the current market, but also kind of hint at potential challenges down the road.
I like it. You're planting a seed. Okay, let's shift gears to Dallas-Fort Worth. Vacancy rates are climbing, but rents are up. It's almost like two different stories depending on where you look.
It is, yeah. If you've got a Class A property in a hotspot like Uptown Turtle Creek, you might actually see your property value go up. But if you own a Class B building in a less competitive area, well, then you have a much stronger case for an appeal. Remember that flight to quality we talked about? That's in full swing in Dallas-Fort Worth.
So location, 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 and the quality of the building.
Exactly. And while we're talking about Dallas-Fort Worth, don't forget about sublease space. It's declining, but it's still higher than historical averages, which can put downward pressure on rents overall. If you can show the assessor that similar properties in your submarket are being offered at lower rates through subleases, that helps your case.
Okay, so dig into those details. Look for anything that supports your argument. Now, what about Houston? It's massive, and the report makes it seem like a bit of a puzzle.
Houston's all about that hyper-local focus. Forget about the citywide averages. Zoom in on your specific submarket and those trends. Remember that Katy Freeway East example we talked about? Positive net absorption in Q3. That's a golden nugget for someone appealing their taxes in that area.
So you're saying even the rest of Houston is struggling, someone in Katy Freeway East can point to their submarket and say, hey, we're different.
Absolutely. They can use that data to show the assessor that their property is in a desirable spot that's performing well, even if the broader market's facing headwinds. It's all about using that data to tell a convincing story.
All right, and finally, San Antonio. Vacancy rates are trending down, which is good news, but they're still elevated compared to before the pandemic. What are the key things to remember when you're prepping for an appeal in San Antonio?
In San Antonio, watch out for new construction. That big project we mentioned in the CBD, that could shake things up.
Right, so if you're near that new development, you could argue that your property value might drop once it's finished and adds to the supply of office space.
Exactly. And don't forget to look at those lease details in your submarket. New leases, renewals, all that stuff gives you clues about demand and rental rates. It's all ammo for your appeal.
Okay, we've talked about all these market reports, how they affect property values.
Yeah.
But how do you actually present this stuff to the assessor? It's one thing to understand it, it's another to actually make your case.
You got to tell a good story. You want to weave a narrative that connects all those data points to your specific property.
So don't just bombard them with numbers. Explain what the numbers mean and why they matter for my specific situation.
That's it. Think of it like building a case in court. You need a clear, concise, persuasive argument that supports your claim for a lower valuation.
Okay, I like that. So be prepared to defend your case like a lawyer. What are some questions I should be ready for?
Well, the assessor might ask how a specific report relates to your property, or they might point out things that suggest your property is actually worth more than you're saying. You got to be ready for those counterarguments, have your responses lined up, and more data to back it all up.
So stay calm, be prepared. What else?
Tone and demeanor are important too. Stay calm, be respectful, use language that's easy to understand. You're not trying to win a fight, you're trying to persuade them.
Don't be a jerk.
Right. And remember, negotiation's a two-way street. Listen to the assessor, try to find some common ground. You might not get everything you want, but a successful appeal usually involves some compromise.
So be flexible. Be willing to meet somewhere in the middle. Any other practical tips?
Document everything, every email, every phone call, meeting notes, everything. Keep a paper trail in case there are any disagreements down the line.
That's smart. Okay, we've covered a lot. National trends, those specific Texas markets, even negotiation tactics. Before we wrap up this part, any parting words of wisdom for our listeners as they get ready for their property tax appeals?
Remember, knowledge is power. These market reports are your friends. Understand the trends, gather the data, and put it all together into a story that makes sense. And don't be afraid to advocate for yourself. You've got this.
Okay, we're back. We've got our data, we understand the trends, we've even practiced our negotiation skills, but now it's game time. We're sitting down with the assessor, ready to make our case. Where do we start?
All right, here's where you really get to show off all that market knowledge you've gained. Imagine you're the savvy property owner. You understand the market inside and out. You start by acknowledging the big picture. The office market's facing some challenges nationally. Texas has got its own mix of trends going on. And your submarket, well, that's got its own unique dynamics too. You're not trying to hide anything. You're showing the assessor that you've done your research.
So you're building credibility right from the start.
Exactly. You're not just there to complain about your taxes, you're demonstrating your understanding of the market. And once you've laid that foundation, then you pivot to your specific property. This is where you highlight all those factors that point to a lower valuation. Maybe your building isn't quite as desirable as some of the newer ones in the market, or maybe occupancy rates in your submarket are dropping. Whatever those key points are, you back them up with solid data from those Cushman and Wakefield report.
It's like, hey, here's what's happening in the market, and here's how my property fits into that picture. And it's not looking so good for my property value.
You got it. But be ready for the assessor to push back a little. They might question your interpretation of the data or ask for more evidence, so you got to anticipate those questions, have your responses ready.
Be prepared for that cross-examination.
Exactly. They might ask, well, how does this report really apply to your property? Or are there any factors that suggest your property is actually worth more than you're saying? You got to be ready to address those points head on.
So stay calm, stay focused, and be ready to defend your position. Any tips for handling those tough questions?
The most important thing is to stick to the facts. Be clear, be concise, don't get flustered or defensive, and try to use language that anyone can understand. Remember, you're trying to persuade the assessor, not get into an argument.
Right, it's not a battle.
Exactly. And remember, negotiation's a two-way street. Listen to the assessor's perspective. Try to find some common ground. You might not get everything you ask for, but a good outcome often involves compromise.
So be flexible, be willing to negotiate. Any other advice?
Document everything. Keep really good records of all your communication with the assessor, emails, phone calls, notes from meetings, everything. That paper trail can be super helpful if any disagreements come up later.
That's smart. Okay, we've covered a lot of ground today. From national trends to hyper-local market insights, and even some negotiation tactics. Any final words of wisdom for our listeners as they gear up for their property tax appeals?
Remember, knowledge is power. These market reports, they're your allies in this process. Use them wisely. Understand the trends, gather the data, and create a convincing story that highlights your property-specific situation. And most importantly, don't be afraid to advocate for yourself. You've got the knowledge, you've got the tools. Now go out there and make your case.
I love it. That's a great pep talk. This deep dive has armed you with the information and the confidence to tackle your property tax appeal strategically. Just remember, markets are constantly changing, so stay informed and adjust your approach as needed. And as always, if you're ever unsure about any part of the process, it's always a good idea to talk to a qualified professional. All right, that wraps up our deep dive into the world of Texas property tax appeals. We hope you found this information helpful and empowering. Good luck with your appeals, and remember, knowledge is power. Thanks for joining us on the deep dive.